Good morning to everybody. Hey, so just going to do a quick brief overview of what we're doing, what we're trading. We trade the 1030 system, and in here we are looking for three to four specific entries, and we have a trend entry, which is a signal such as any one of these ones here, such as this one here, where the we have a signal bar here, and on this signal bar we actually get the following candle, we get a break of the signal bar, and we will enter that trade on the break of the previous.
David,
yes.
what's the definition of trend?
Trend is when the for an uptrend, for an example, is when the 10 is above the 30 and the 30 is above the 200.
Okay.
In a downtrend is where the 10 is below the 30 and the 30 is below the 200. So that's what we justify as trend. So when we're looking at the chart we're looking at right now, which is the pound dollar, we're obviously here looking, we're looking in the rear view mirror, but we see that the trend is an upward trend. All right, so what we're looking for is we're looking for signals. We're looking for a signal like this signal right here, that we get a signal candle we get a signal on this candle, and then the following candle breaks this candle here. We are entering into that trade for a buy because it's an uptrend. So we would enter on the top of this candle.
And you would set your stop?
You would set your stop at the bottom of the Ames box, which is basically 12 pips right here.
Right. Now, what is the Ames box?
The Ames box is a box that we have that will show us the previous swing highs and swing lows of a group of candles. All right, so we're looking at this entry here. Our stop loss is 12. Our goal is 5. So we would be in this trade for a little bit. Okay, so for an example, we're in that trade for 17 candles. So a little over an hour where we would be in that trade.
We had a question, I think it was yesterday or Thursday, about add-on. If you can add on to the position. Maybe I'm out in front on this thing, but I'm just,
my suggestion is no.
You can see a couple of other entries, at least, well,
a
couple of other entries before you get to the 5.
Right, right. Well, I mean, that really depends on your risk palette. As far as I'm concerned, that depends on your risk palette. I mean, if you see an entry and you're taking a micro lot and you want to take another one, that's fine. The problem with doing that in the United States is you have a rule called FIFO, first in and first out. So if you take this trade here and then you take one or two other ones over here and they start going against you, but these couple go into profit, your first trade, and if your first trade's not in profit, you have to close your first trade in a loss situation first before you can take profit on the following trade. And so it's first in and first out. So would I take the trade? Personally, I've taken 3 or 4 of them. I did one yesterday where I took 3 of them.
You had 3 positions on the same move? Is that
I
what
had
you're saying?
I had 3 positions on the same. I would have a position here, and then I would have taken another position here on this one here, and I would have taken another position on this one here.
Okay.
Because these are valid inside and outside bar entries. So that's the second trading style that we look for. Is we look for inside and outside bars that go with trend, not counter trend, but that go with trend. So for an example, an inside bar is this bar right here, which closed inside the previous bar, and being closed in the following, our signal is when the next candle breaks above the close of, or sorry, above the previous inside candle marker. So here we got an inside bar call. Here we got a broke of the inside bar. We enter the trade, and we're in the trade long. Again, our goal is 5 pips. Pardon me. So we have
What about what if it doesn't break on the next bar, but it does on like the second or third?
If it breaks the first bar, that is a solid signal. And every signal, every candle after up to 3, it is a good, still a qualifying entry. However, the probability becomes less and less of a chance to succeed in that trade. So therefore, anything beyond 3, I would suggest that it becomes a no trade situation.
So you have a 3-bar limit on an inside-outside bar entry.
Yeah.
Okay.
Okay. So.
And you still have the same stop loss level on the inside bar as you did on the entry, on the signal bar, right?
Correct. So your entry on this inside bar here would be at right at this point here, which is 161, or sorry, 165.80, and your stop loss would be at 165.68. Okay, so and again, you automatically set your take profits and stop losses, and then you can walk away, not walk away, but you can move on to the next trade. Okay, so the other thing that we look for, and the final one that we're going to talk about today, is what we classify as the top of the hour trades. Top of the hour trades is a grouping of 3 candles: the 45-minute candle, the 50, and it's marked by this marker that we have here, this yellow marker. It's the 45-minute candle, the 50-minute candle, and the 55-minute candle. Now, when a trade, we look at those 3 candles, and when the following candle breaks above those 3 candles, then it is considered a valid entry. Let me see if I can find one here. Here's one right here. Okay, so we have the 45-minute candle, the 50-minute candle, and the 55-minute candle. The following candle, the 1-hour candle, broke above all 3 of them. So it has to actually break. I'll draw a line here. So there's the top of the one.
I think you're a bar behind on that. I think the yellow marked bar is the 45.
Yeah, I'm going to just move it down. I just put it in there, sorry. So let me move. So that's your candle there. So that's the 45, 50, 55. So I'm going to move that up to there. Okay. So that's that's a valid entry above it. Again, you look for your, so we would enter there. You would look for your previous swing low, which is this one here, which is an 9 pip stop loss for your entry here. All right, so, and that would have been 7. Okay, so that's a top of the hour trade. We have noticed, we have one more trade that we're going to talk about a little bit, is that we have noticed that we don't trade, sorry, let's back up a little bit. We do not trade inside the wiggle. If we have a valid entry on the 40-minute candle, then we will take it on the 45-minute candle. But we do not trade in. We do not take any trades inside the wiggle if we get a signal inside the wiggle. However, if we get an inside or outside bar in the wiggle, it does become a valid trade. We have noticed that the inside-outside bars inside the wiggle period are very strong signals with trend only. So everything is with trend only here. So that's the basic for trades that we trade. Does anybody have any questions with regards to those?
Going back to the first entry, okay, you've got your first entry.
Right here.
Okay, and your stop loss is at the previous swing low.
Which is 12 pips.
Then you had a second entry. On that inside bar.
Right.
Yeah, right there. Still have the same stop loss.
Yes.
Okay, then you go over to the third entry. Of course, that swing low won't be formed until you're just about out of the trade. So I was thinking that you could move your stop loss up to that, but you would be out of the trade by the time that swing formed.
Yes, because you would be out of that. You should be out of that trade before that's right here. Yeah, that swing is just forming now on this first candle here in that swing.
Yeah, I saw that swing low off the third entry, but that wouldn't have been formed until the third bar of that move up. So I was wrong on that. Okay, I was wondering if you needed to move your stop up to this
up to here
swing low that was being formed after the third entry, but that wouldn't have formed until you're out of trade.
That's correct.
Yeah. Okay.
Right, but that's a very valid thing. So, for an example, if we are in a sideways market and we have created a new swing low, and we were, our entry was in here, we created a new swing low. We would move our stop up to here, and then our exposure on this swing would only be 5 pips instead of the 9 pips from over here that we would have had, or 9 or 10 pips that we would have had exposure over here. So that's correct. So anybody else with any questions?
David, does the Ames box only print 5-point swings?
5-point swings?
It's the 5-point. It's the 5 bar.
5-bar swing, right? Okay.
5-bar swing. Yeah. Like
Yes.
You have 1 bar, two above it on the left side, and 2 above it on the right side. That'll be a swing low. And swing high will be 1 bar with 2 on the left side below it and 2 on the right side below it. This will make a swing high.
Okay. All right. So let's move on and see what we can do in taking a few trades here. I'm going to delete these lines. Go ahead.
One more question, please?
Sure.
Yeah, I know you guys are using the Ames box. Okay, so overall, do you find that it may keep, even though it may keep you in the trades longer, like in that first trade with the 12-pip stop, but overall they'll hold up unless an extreme change in price direction?
Yes, they do. Yeah. The only time that they do not hold up in an extreme situation or like in a situation is when we have any significant news announcements on that pair. And that's the other thing. You have to really pay attention to the news. If you've got some big news, whether you're in a loss situation or in a gain situation, get out of the trade. Close it. Don't be afraid to close a trade in a loss position if there's a major news event coming up, like a red news event on Forex Factory or something of that nature. You just don't want to get caught losing 20 points or 20 pips when you could have got out losing only 4 or 5 pips.
Okay, and the other thing is, okay, all experimental yesterday, but I was entering all trades using the same criteria, which is 5 profit and 10 stop. So that fixed stop thing didn't work well on that method. So maybe the last swing is what I need to use instead then.
You're going to find that it's whatever you're comfortable with. I'm primarily comfortable with, you should have an emergency stop in there no matter what. Let's say, for an example, you want to create the swing, but you put an emergency stop of 20 or 25 pips. Okay. So no matter what, you can make it up in 3 or 4 trades, unless you have 3 or 4 of them in a row that are really bad. And if you get a lot of bad trades, stop trading for the day. Plain and simple. It's just not because it becomes a stress thing. It becomes a mental situation. You got to get it back. You got to get it back. Stop trading. The market's going to be there tomorrow. Step away from it for a few hours. Clear your head so that you're not worrying about, I have to get back my 20 pips, and move on. Move on to the next. Go for a walk. Clear your head, and then because you don't want the emotions to get in there with regards to the trades. And that's one of the biggest mistakes that everybody makes. I make it myself. We all make that mistake, going, oh boy, we're down 30, 40 pips. I got to do something to get it back. Well, welcome to the market. There's risk involved, and you'll have up days, you'll have down days. you'll have break-even days. But the whole goal over this whole system, or any system for that fact, is that the overall picture is to be up in your trades. Period. If you have 1 or 2 losing days, step away for a while. Don't trade erratically. Don't trade. And I mean, I have to take that advice from myself. I have had days where I've looked at my charts and said, man, I wish. What's going wrong? What's going wrong? How come I'm getting hammered here? Well, I should enter that trade because that trade looks good. Well, like there are certain things that you forget about. Like when we're looking at a trend, as an example, and I'm looking at a trade, here I have a signal right here on this candle here. All right, the MAs are pointing. The one MA is pointing in the right direction. The other MA is not pointing in the right direction. All right. As an example, this is my example. The 10 is pointing out about 1:30, 2 o'clock. However, the 10 is pointing at just below 3 o'clock. So that means that these MAs are getting closer together. Well, unless I know that this MA is actually pointing up at 1 o'clock or so, I shouldn't get in this trade. It looks like a valid trade. It is a valid trade. However, by looking at this trade, I could be sitting in this trade for quite some time to get my profit, or potentially lose the trade. So watch the MAs, watch the moving averages, see which way that they are forming. If they're forming on an uptrend, if they're forming in an upward aggressive slope, and you get a signal, that's a solid entry. If they are pointing towards each other, then it's not a solid entry. Like just pay attention to the moving averages. They work fantastic. Pay attention to the AIMS boxes and pay attention to news. Those 3 things will, if you can sit on top of those 3 things all the time, be patient, say, okay, what are my rules? What's going on? Where do I go? All right. And stochastic is also an important situation in this, whether we're overbought or oversold. Oops, where did I just go with that? There I am. So in this situation here, my stochastic is moving down. It's going into lower territory. It's not overbought or oversold. So likelihood, no, I don't see a curl up to go in an upward trend on it. So I'm not in the trade. Or I shouldn't be in the trade. But my emotions might push me into that trade if I've lost 3 or 4 prior trades. So sit on your hands. Okay, it's the best advice I can give with regards to that. Okay, any questions before I move on? Okay, let's move on and see if what we can muster up for trades here. If you guys want to do some back testing of the system, it's very simple. If you move you turn your auto scroll off, go back 3 or 4 days or a week or a month or whatever, and just put your chart wherever you want and hit F12. F12, oops, wrong. F12 will move each candle forward 1 candle at a time. So that way you can see where you're at. So our trading times that we like to trade are about an hour after Tokyo close until London close. So, but you guys, if you want to trade other time frames, that's fine. But we've just found that that's where the most volume is in the market for us, and so let's move right over to there. Okay, so there's London open. We're now at Tokyo close, so one. So we're looking for entries now. We see that the 200 is above the 30 and it's above the 10, so therefore we're looking at a downtrend, and we're looking for any signals that come off of a downtrend. So we have a signal here in a downtrend where our signal has broke and closed below the 10 moving average. Okay, we have the following bar has broke that thing. However, our stochastic is moving upwards a little bit and hasn't curled down yet. So it is a valid entry. It is probably one I would have taken. I do put weight in the stochastics. It is the stochastics is very close to the overbought area. So my probability is I'm in this trade.
The 10 is going up though.
You're right. See, that was a trick question. No. You're right. The 10 is going up. So let's but the MAs are also very far apart. They're far enough apart. If they were really close together, like over here or like over here, it kind of replies for a cross for me. So of the MAs. So I tend not to trade it when they're really tight. So I should have qualified that with how far apart they are. Anyway, so I'm in that trade. And
so you're saying just trust the price action?
Trust the price action. I'm in that trade. Now my stop loss is 9. My take profit, I haven't hit it yet. And Daryl, you are going to get me on this one, aren't you? So I'm there. Yeah, I'm out of that trade. I lost that trade. So there you go. There's my emotions entering in the trade instead of me following the rules to some degree. Okay. So
I'm not even going to say I told you so.
yeah. Well, let me qualify that now. See, there's my entry. If I had gotten in right at the mark, but if I had gotten in down here, I'd be out of the trade. So it's too close to the stop loss. I am out of that trade. I did lose that trade. All right. So here we have another signal. So our entry will be here. Let me mark it. The MAs are all pointing in the right direction. They're both pointing downward. All right. I do this for myself as much as I do it for you guys because I don't always follow the rules 110%. But the more that I tell you guys the rules, the more that it engraves into me the rules as well. And so we have an entry there. We have entered that trade. We've got a qualified entry. Our stop loss is 12, and we're looking for a 5 pip take profit, which we ended up getting. We're in and out of that trade 10 minutes. That was a successful trade. We then have another valid entry. Oops, F12. So that's 1 for 1. Who's keeping track here? So can somebody keep track? One winner, one loser. So we'd have another valid entry right here. Okay, we have a break of that entry. If you're more than a pip or two away from that entry, do not get in the trade. Do not chase the trade. So if you get in way down here, don't worry about it. There's going to be lots of opportunity to get in more trades. So we have a valid entry here. We've now entered it. All right, and our stop loss will be the top of the Ames box, which is 15 pips, and our take profit is going to be 5, and we took profit on the 2 candles later. All right, we have another, we have an outside bar and an inside bar. We're still in this trade until this one's gone, so we won't take this trade. We'll take the next trade, which is right here. It's a valid entry. It's a valid entry, and our stop loss is set for 20. Now that's a little high for my appetite, so I have my, I will probably look in here for a level of support and resistance on a higher time frame to see where or not I should put it. But the rule of thumb is the previous high, so there's the previous high, so we'll put it at 20. Looking for a 5 pip profit. We're in the trade, and we're out of the trade. All right, now we have a top of the hour trade coming up. 1, 2, 3, 45 minute, 50, 55 minute. All right, there's our area for a downtrend. We're in that trade. So how many is that so far? Is that 3 to 1, right? I guess I am going to keep track. All right, so we're in that trade, and F12. Our stop loss is going to be here at the previous swing high, or you can put it, well, actually you can put it at this swing high, which is 17. We're in the trade, and we're looking for our 5 pip take profit, and we're out of the trade. We don't sit there and, okay, darn, look at all of that we could have got, should have got, would have got. We have another signal here. We're going to move our, entry to here. All right, so we did not have a break of that candle, but we did get another inside candles, or an inside bar. So we would move our entry to there instead of taking this one here, because now that's an outside bar, and it's now in the wiggle. Okay, it's valid to there, to here, and we're in that trade. So we have now entered that trade based off of the inside bar right there. Oops, why did I do that? Let me move this over here for, oops. I'm just going to straighten this guy up here. All right, so we're in that trade, and now we have a huge swing high here, or we have a huge Ames box here. We're obviously not going to set our stop loss at 58 pips, so we will set it at the a pivot point or a big number as well. Those are other things that I should have discussed that I never did, is that we will trade to and away from big numbers, which are zeros, 25, 50, 75, and we will also keep a good close eye on support and resistance line, S1, S2, S3, and the pivot line. So I will put my stop 14 pips away at the big number, which is this big number is a 50, and I'm in the trade. So and I'm out of the trade. The very next candle, I'm out of the trade. All right. So now, what was that stop loss that we had over here? Sorry, I got to go back here for a second. Which one was it? This one here. This one here, right here. All right. So our stop loss was we were stopped at with 10. All right. And let's move forward. All right. And here we are. We took that one. We were in profit. All right. We have an inside bar here. All right. Here's our inside bar. We did not get a break. We did not get a break. We are, we are not in that trade. However, now we have another signal back. Oops. We have another signal. Why can't I grab that?
It's too close to the line.
Oh, I'm now cheating.
Just draw a new one.
There, we'll move it over here first. If I can grab it. There we are. So let's go back a bit. We've cheated a little bit here now that we've done that. We now have a signal down and an outside bar. So that's a pretty solid trade or entry. And we're in that trade 3 candles later. Our stop loss we should be setting at, oops. Our stop loss should be setting at the swing high, which is 13 pips. And we're in that trade, and we're out of that trade with our 5.
Couldn't you switch and take that inside bar after the signal bar?
No, the entry is break of this one here. You could take this inside bar. That would be a valid trade too. Yes, absolutely. I agree. Because this one never broke, so you're right. This would be the inside bar break. This would be the signal that we would actually have to break. This one did not break until over here. So this would be a valid, this is also a valid entry, and our stop loss would still be 15 or 10 to the top of the swing. So we're in that trade, and that's a valid entry, and we're in and we're out of it. All right. So F12. We have another entry here. All right. This entry is at a 75, so we're looking at the big number here. This 75 is 50s and zeros are very powerful support and resistance marks. If it goes down to the 50 or the 0, it will probability of it bouncing off of those are higher than if it's the 75 or 25. And you know, you can see right here as an example, it come down, it bounced off the number and went back up. So, but it broke through the number here, and then it broke back up through it. So, but if you look at a 50 here, this is the 50 up here. Is this the 50? No, it's a 75 as well. So F12. So this is not a valid entry yet, so we shouldn't be in this trade because this candle did not break below the following the signal candle. All right, so I would not be in this trade as of this candle here. I would be waiting for the next signal. We got another signal here. We got a break of that signal right here. Our stochastics is curling down and at very high, so we're good. That's an entry. So we're in that trade. Our stop loss is 15. Actually, sorry, because we haven't created that swing yet. So our stop loss is 21. 1, 2, 3, 4, 5. Yeah, we did create that swing. So our stop loss is 15. And our take profit is 5. And we're in and out of that trade. We're now waiting for the next, let's see here, 5. 5 would have been the bottom of this, 5 would have been the bottom of this inside bar. So you could you could re-enter another trade off of this one here, or you could pull down your your take profit and just keep that trade going. I've done that several times. Or you can just close it and wait for the next signal. So then there's the next signal there. We're in the trade. Our stop loss should be 18, the top of the swing, and we're in and out of that trade with our 5. All right, so now we're into New York Open now, so we're getting close to the end of the day. All right, so oops, let me just grab this. All right, and we have a top of the hour trade here. All right, we have a top of the hour trade, so we got 1, 2, 3 candles, 45, 50, 55. So we are going to enter that trade there. We've entered it because this candle broke it, and hopefully we're quick enough. Where we would have if we had. So that's a valid trade. Our next entry is not this. This is an inside bar here, except it's going against the trend. So our next entry would be right here. We got a signal. We did get a break of it. Our stop loss is 19 pips away. We almost got stopped out there. It looks like we got stopped out there, so it looks like we lost that trade. We have another signal here. Or let's look at this one here for an example, or a second here. The MA is going the 10 MA is going sideways. All right. It's had a pretty significant run. The 10 MA is on that entry for the last 2 candles has been going sideways. We should look at that and see whether or not we are really going to take that trade. Price action says it's still a valid trade. However, the 10 says that it could go against us, and it did go against us. All right, we have another entry right here. We have another entry right here. Stochastics is in agreement with it. It's curling down. The MAs are getting a little tighter together, but this one's pointing to 4 o'clock. This one's starting to swing down from what I see a little bit. So, you know, oh, come on. So I'm gonna mark that as a potential trade. It didn't break. It didn't break. It's a no trade. All right. We then have, we know our next one is we got a top of the hour. We got a signal inside the top of the hour. The problem is that we don't take that trade because it's inside the top of the hour, so it's not a valid trade for us. And we're now here at the end of London close, so this is where, you know, if we've got existing open trades, we'll let them run or we'll get out of them depending on what you want to do. But we've kind of traded enough. If we see, you know, and also the MAs are getting really tight together, so we're done on this pair. So if I added correctly, I had 2 losses, 10 wins. This one here was the loss. Where was the entry? Entry was here. We got our 18. So 18. So we're down 28 pips there, but if on my 5 I've got 50. So I'm up 22 pips on this pair for the day. Okay. Any questions?
Yeah, good morning, David. How are you?
Oh, good morning.
I do have a question. I don't know if it's the right time for the question, so you decide, but have you or Roger actually analyzed whether or not there would be advantages to getting out, like with scalping stops? And by that I mean, you know, hey, 7 pips against me, jump out. 7 pips against me, jump out. And then if the trade comes back to where I originally got in, and everything's the same, get back in if you want. But I'm just saying, short of losses, would that make a difference, or do a lot of the trades come back to you, I guess is the question.
That really depends on the individual person. Yes, I do believe most of the trades will come back. I mean, if you've got a solid confirmation of a downtrend or an uptrend, depending on what the trend is, most of the trades will come back. I mean, you know, there has to be there has to be an emergency or a be-all, stop-all, you know, limit set. You know, and don't let the trade go 40, 50, 60 pips behind you.
Right, of course.
But if you let, you know, but in most cases, if we allow it to go, you know, 10 to 15, most times it's in our favor.
Okay, good. Then I'd have to look at that because, you know, I'm used to getting out quicker, but if they're coming back in your favor, I don't need the losses either. I'd rather see. So, okay, thank you. I'm just
Actually, that's quite an unusual day, that one, David, isn't it? Because basically the 10 stay below the 30 the whole time. So
Well,
you could have got,
I'm going to move on to the next day. This was just
I
the
was going to say,
second.
because that was a very unusual day, wasn't it? Because you could have taken every short signal and then just put your stops just a couple of pips above the 30. You'd have been creamed it all day, wouldn't you?
Well,
You
we
don't
I,
get many
we
days like
actually
that.
we actually did cream it all day. But
Yeah, I know. You don't get many days like that, do you?
okay. Well, let's move on to the let's move
Yeah.
on. So that's
Great day, that one, by the look of it.
yeah. So, but I mean, again, guys, remember one thing. Okay, that's only one pair. If you're trading 5 pairs, okay, and you made between 20 and 25 pips per pair, and you're trading 5 pairs. That's 100 pips a day.
Yeah. Yeah,
Okay.
I wasn't saying that to sound critical. I'm sorry if it came across like that.
Oh, it didn't. So let's
Yeah.
just keep. Okay, so let's move. Anybody else have any basic or any other questions that we can answer before we move on to taking more trades here?
Okay, David, would you mind looking at the Euro odd yesterday? I mean, that was one that isn't nearly as pretty as this, and
Okay,
so that would be a great lesson for me, I know.
sure. Let's go to the Euro odd here. All right, let me just delete a few things out of here. Just because I don't want them I don't need them on the screen here. All right, and let's close that. And auto scroll off, and I'll go back quickly so I don't. All right, and let's refresh so we see where we're at. All right, so that's London close on the 2nd. And let's move forward from here. All right, so that's New York close. New York midnight. London Open. So London Open, we're looking around, seeing what's going on. I like to be in at least an hour or so before, an hour or two before, just to kind of get a feel of what the Brits are doing.
You know what us Brits are like.
Yeah. Okay, so now I'm taking a really close look at it. I see that everything is below the 200 at the moment. And all right, so here we are about an hour afterwards. Yeah, so that's 1 hour after. We have an entry here. We have an MA 10 that is pointing at about 330, and we have a 10 pointing at 3:30, 4 o'clock. It's very, very tight. It's a questionable entry, but based on what I've seen in the rear view mirror, my stochastics is going down. To me, it's a valid entry. Okay. Oops, wrong one. Let me just draw a trend line here. All right, so I'm going to put a mark there. All right, if I get it, my previous swing high is 8.16. Again, I'm going to look at 14 pips here. To me, anything under 7, 8 you're going to get stopped out more often than if you let it run for a little bit. Okay, because an average swing is 25 pips. That's so if you basically take an average swing, divide it in half, you should have you should have a stop loss somewhere around 12 and a half, thereabouts. Or and one thing we didn't cover in here is, and maybe as soon as I see one, I'll point it out, is if you get a change in, if you get a counter trend, if your MAs cross and you're in a downtrend and your MAs cross and you're going into an uptrend and you get a signal to go up, get out of the trade. Okay, just it's if you can, if that way you're only losing 4 or 5 pips instead of losing the full swing of 20 or whatever your stop loss is. Okay, so we have also now an inside bar here, so you can move that up to that inside bar. We have again, the MAs are very tight, but they are still slightly pointing in a downward direction, and I'm in that trade because the next candle broke and I lost that trade. Okay, so there says if they're really tight and they're going sideways, sit on your hands. Sit on your hands. So we would have taken a is it there? Yeah, there. We would have taken a 11, 12 pip stop. So we're minus 12 on that one. And okay, so now we have a crossing of the MAs, 10 and the 30 going upwards. Okay, so we have this is a counter trend trade, which we really haven't discussed a lot about. All right, we now have a new signal down, so we would not take this counter trend trade. We're not in this trade. We have a signal here. It's not valid because the 10 is above the 30. Okay, so all of our MAs are not in line. We have a cross here of our 10 and 30 right here. This is a top of the hour trade right here, 45-minute, 50, 55-minute candle. We had a break of that 55-minute candle. However, again, it's a questionable trade because the MAs are so tight together. You should stay out of that trade. The MAs are starting to separate, coming back together. So that's a no trade situation. Okay, guys, it's a no trades. We have another entry here. MAs are starting to point down. MAs are tight together. We have also a outside bar. Stochastic is going down and underneath it. It's a valid entry. Again, personally, the MAs are way too close together, so you should stay out of the trade. All right, we're now, where are we? Refresh. Tokyo closed. We're now getting into New York Open. We have a valid entry here. The 30 is sideways. The 10 is pointing down. Looks like it's going to open up a little bit. This is a valid entry. Stochastics is pointing in the right direction. it is a valid entry, but you know, do you want to take it? That's up to you guys. But to me, it's a no. It should be a no trade because the MAs are too tight together. All right. So now the MAs are opening up, and we should have had. Oh, this one didn't close above it. All right. So we have an entry here. All right. We have a signal here on this candle here. We have a break of it. We also have an outside bar. We didn't know that that outside bar is forming yet, but it's so our stop loss. So that is an entry. Okay, that is an entry. Our stop loss is the top of the swing, which is 17 pips, and we're in the trade, and it's a successful trade. There, it's right there.
Yeah.
All right.
And you've got another inside bar in that wiggle.
Right, but if you're already in a trade, depending on what you're doing, you know,
Mm-hmm.
you're in the trade. You can get out. You can get into another one, or you can or not. That's up to you guys. Roger's right. There is another one there. So we got we're in that one. Back here, and let's see here. We're out on the 1 hour candle. 45, 50, 55. Yeah, we're out on the 5 minute candle. We do have that opportunity to hop back into that trade because this candle broke below the top of the hour trading. So if you wanted to hop back into it, you could, or you can, or you can pull your take profit down a little bit further if you see that you're in that trade. But get in and get out of the trade. Don't mess with pulling your take profits down. I mean, I shouldn't even suggest that because sometimes it's good, sometimes it goes against you, and it's better to put the money in your pocket than it is to give it back to the broker when you know you were up 5 pips.
Was the bearish engulfing bar a trade, David?
Pardon me?
Was the bearish engulfing bar a trade? The outside bar.
This one here?
Yeah,
Yes.
that one.
Yes, it was.
Yeah.
Any trade inside the wiggle that is inside or outside bar is now from our research that we've done over our testing is a very solid, valid trade.
Okay.
Okay, so we're in that trade. We're out of. So I'm just going to say that we took the first trade and we didn't take the second trade. All right, so we now have another entry right here. Our MAs are all pointing downward. We did not get a break of it. It's a no trade. 1, 2, 3. It's a no trade. However, we got another signal here. Our MA is slowly starting to level out here, so we have to really watch for that a little bit. Our stochastic is starting to climb up a little bit, but our 30 is still pointing at about 5 o'clock, 4:30ish, I guess. And we have so that's now become an outside bar. We now have another bar, which is an inside bar. MA is now pointing back down. That's a valid entry, and we are now in the trade. Our stop loss is 10. It's the big number here. So we just go just a little bit above 10. So I'm going to put my stop loss at 12. I'll just mark that just for. I put my stop loss at 12. I'm in the trade. and I almost get stopped out, but I didn't. Depends on the broker, depends on where you are. You might have, because my stop loss would have been here, which is 12. So right there, that's my stop loss on that one. Let me just mark it, right, make sure it's 12. Here's my entry. Yeah, 12. I didn't get stopped out. That was a good trade. All right. We now have a valid entry on the very next candle because we're out of this trade. We have a valid entry on the very next candle for the top of the hour trade, 1:45, 50, 55 minute. We have a break of it right there. All right. We just broke S2. Okay, we broke through it, so that's a valid trade, and our stop loss would be 18 pips, and we're out of that trade at the big number. So we're up. We have an outside bar here. That outside bar did not get broke. We have another outside bar right there. That one did get broke. MAs are all pointing down. Our stop loss is 17. And we have, do we have ourselves? Yeah, we're in and out of that trade as a successful trade. All right, we have another entry here. Okay, our stop loss will be 20. We got stopped out on that one.
All right, thanks.
Okay. But let's look at that one real quick, because should we have actually taken that trade? Our MA is going pretty much sideways here, right? I just moved my crosshair over. So we're pretty much going sideways here with that on that MA. Should we have taken that trade? It's a valid trade. It's a the 10 should be curling down, but it was sideways. It's a judgment call trade. Everything is going downwards. Did we have news there? I don't know. I didn't look at the news. If we had had news, when we should have tightened up our stop, or or got out of the trade with a smaller loss than 20 pips. But I don't have the news up and running at that right now to see whether or not there was a news announcement at that time. All right. So let's refresh, see where we are. We're at New York Open here. Oops. F12. All right, and delete this line. F12. London close. Okay, so on that pair we didn't do very well. We got 25 pips. We actually lost money on that if we were just trading that pair for the day. We are down, that's 32. We're down 7 pips on that pair for the day. Okay, but again, you know, if you're only trading one pair, then that would have been a loss of the day. If you're trading 2 or 3 other pairs at the same time, you're still up on your pips. So if I put just those 2 pair together, we are still up 15 pips for the day.
All right, thanks.
Okay, but now again, you know, like I don't know whether on that news announcement, if that was a news announcement, you know, you'd have probably wanted to set your, well, wait a minute, where was our stop on this one? That was a valid entry. Our stop, yeah, our stop was 20 pips right here, top of the swing. Okay, actually your stop should have been this this support and resistance line. That's where the, instead of the swing high, that's where the stop should have been, which is, you know, 13 pips. You know, it's just trying to understand and remember all the rules, and that will come with more and more practice. Okay, any questions?
Well, I have more.
Sorry?
Yeah. Okay, I don't. I currently don't trade pairs like the Swissy and the CAD because and the Kiwi because, you know, typically they don't move a lot. But I'm wondering if that's kind of advantageous too, because number one, your stops would tend to be less, and you're a lot less likely to get wild swings like.
Well, do you want to take a look at real quickly? Take a look at a UCAD and or a Swiss. Don't matter to me. We can do it.
Well, I mean, that's just a general question to you and Roger.
Well, I mean, we trade. Roger trades, I think, 9 or 10 pairs. I look at 13 pairs all the time, 13, 14 pairs. You know, it's a mix and match. If you're, you know, you have to look at your spreads on each of the pair to make your decision. You have to look at market. You know, what has it been doing? I mean, look in the mirror and see. Okay, if it's been just consolidating for the last 3 or 4 hours, don't trade that pair until you get a definite understanding of a trend. You know, a definite signal of a trend one way or the other. You know, like don't, in this area right here from between London and New York, that is totally consolidated. You know, it's only moved 25, 30 pips in that whole range. You know, you don't know that, but when you're looking in the mirror and you're looking right here, you can see, oh, you know, it's been ranging, so let's wait until we see a significant break of that ranging, because you can look in that mirror. That mirror you can look in, you know, and you can say, oh, I see you know, I don't see a definite change of that consolidation until it's now broke out of it right here after New York Open. All right, so yeah, you know what? You're sitting on your hands on this pair for 4.5 hours, right? You know, 60 candles, but you know, we don't have a definite you know, definite direction of trend in that period. So, you know, look at it every once in a while and then just move on to another pair. But to answer your question, Daryl, what you need to do is you need to back test the same way that I'm doing it right here, every single pair for, you know, the last, you know, month or so, and see which pair you are able to get a higher volume of trades in. look at a higher time frame chart to see whether or not there is any, even if there's any consolidation in a higher a 1 hour time chart. If you've got a consolidation of 30, 40 pips on a 1 hour time chart, then stay away from it. Until you see a definite break of that trend. Does that make sense?
Sure does. Thank you.
Okay. So, I mean, you have to look at whatever pairs that you guys trade and see whether or not this method works for you guys. Like it's a very, there's some very straightforward and simple rules. All right. Follow the rules, and you trade four or five pairs. Follow the rules. Don't try and trade 15 pairs. Find 3 or 4 pair that you're very happy with, that the spreads are somewhat reasonable for you to deal with, and go with that. Okay. Any other questions before I end the recording? No? Don't be shy. John, you got any questions?
No.
Good. Okay. How about you, Chris?
Nope.
Any questions, Chris?
No.
Okay. Okay, good. Larry?
Yeah, I just, not a question, a comment, if you want.
Sure, sure.
What you just said last, I think is so critical, particularly for new people and or experienced people, because I went through this, looking at a new system, and that is not to look at 10, 12, and 15 pair. It's so much easier to learn a system just concentrating on the in bars, the outside bars, and the cross of the 1030 and watching it wiggle. 4 or 5 things you look at, but look at it on just 2 or 3 pair in the beginning. Look at the euro dollar, the pound dollar, and maybe the EJ to throw in a yen pair. And it's much clearer when you go from 6, 12, 9 pair, you're really missing the signals. You can't catch them all. So I agree wholeheartedly with what you said. Just limit your pairs in the beginning and learn the system, and then add a pair, So great advice.
Okay, thank you. Anybody else? Roger, you want to add anything into this?
I guess probably the best thing for them to do is put that Royal on True, and that'll give them just trend trades.
Yes, they're very good, very valid, very good.
Yeah.
Okay. Does everybody know how to do that? All right, I'll show you anyways, just in case you don't. So basically, just click on the, go into your indicator, your list, click on your Royale there, edit, and then in here there'll be alerts, alert filter MA. That just change the bottom one to true. Pardon me. And if you want to go back further and back test more, change this bar limit. I think it's set at 200 or something like that. Change it to a bigger number so that you can go back 3 or 4 or 5 days, and there you go. Close that, and all of the counter trend trade signals do not show up on the chart. So it's just showing you breaks of the 10 in direction of trend, period.
Or you could put change it to 10 and 200. That would definitely give you just trend trades.
Sure. You could do that
But it
too.
would, it would keep you in trend, definitely.
Okay. All right, well, if nobody has any questions, do you want me to go over another pair, or is everybody happy?
I'm a happy guy.
Okay. Well,
Good
if
job. Thank you, David.
okay, if everybody's okay, thank you, Sean. Guys, just drop any questions, comments into the lounge, and we will do our best to address them. And the only other thing I can probably add to the end of this is that you have to practice. You have to practice. You have to practice. Take everything else. Do yourself a favor, okay? To learn this system properly, take everything else off your charts. Just put what we have on our charts on your charts. Nothing else. Don't put any other indicators. Don't put anything else on there. Just put what we have on our charts. Keep it simple and follow the very simple rules and test it. And you will see that over a period of a couple of weeks that you will get it, and then you won't look back. You honestly will not look back. Larry is one that can attest to that. Basically, he's had a very good system that he's run for a long time. As soon as he decided to look at ours and give it a true understanding, he's increased his pips. I don't know. He hasn't really divulged that information, but he says it's been very very successful for him. So, and same with Sean. Sean is now decided not to throw other things into the charts, look at other stuff, just concentrate, backtest, backtest, backtest. And you will see. You will get it. And when you get it, it'll be a pipful day for you. Okay, guys. On that note, let's have a great week coming up.
Good. Thank you.
Thank you very much, David.
All right.
Thanks, Dave. Enjoy your weekend.
Yeah.